not unlike an engulf we find, or an harami, which is more, more, what should I say, these are more definitive. These are small trend changes. Now, next most important topic is actually gaps in the market. There are always gaps, as you could see, even in between the candles. The gaps are not just formed between the previous day and the current day. Yeah, it is also formed in the rally, during the rally also. But during the rally, we might not find a great gap. There will not be usually gap. Usually we'll find it. Usually we find the gaps. These gaps are very important. Yeah, I'll come to the different types of gaps. But before that, a gap is a discontinuous space in the pricing chart of an asset or security, often occurring between trading hours. Yeah, it could be between yesterday and today. It could be during the trading hours also. As you can see now, these are some of the common gaps you'll find. Now there are four different types of gaps. The common gaps, the breakaway gaps. Breakaway in the sense, suddenly there is a buying, there is a buying pressure, there is a breakaway gap. Then there's something called, common gaps are like, it's trading, there is lull in the market. There are some gaps, lull in the market, and then suddenly there is some volume, either it's below or more. These things happen in a sideways market. But breakaway is, when it breaks from the channel, it breaks, usually gives a gap. There is a gap and then opening. It's a breakaway gap. Then you have runaway. When it's an uptrend, there are gaps that are lots of gaps that is being formed. And then usually there are followed by that, there's exhaustion gaps. There is a gap, but it doesn't stay there. Let's assume that, the stock managed to open 2 rupees gap, but during the day it managed to close, or it fell below that. It's an exhaustion gap, which is clearly trying to tell that, there's not much of a buying, there's not much of buying left in that stock. There is an exhaustion here. So we should clearly understand where exactly is happening. Is it happening in the sideways movement? Is it happening in the breaking of the channel? Because these levels are important. This will determine your fresh supports and resistance. Yeah, these are usually a very big support. It offers either a very big support or it offers a very big resistance if there is a retracement and then when it is trying to come back. Yeah, it acts at these points. So it's important to know these gaps wherever it would have happened. The gap, particularly, in the month of May, the stock would have fallen with a couple of gaps, and now it is trying to retrace in the month of August. And at that time, you're only seeing August chart, but why is it behaving like this? There are gaps in the market, which is actually it is sensitive to. Either it is acting as a resistance, either it is giving you a support, or it's acting as a resistance. You will see that, even when it is happening. That's why historically it is necessary to know whatever period, what happened during the same price, what happened previously matters a lot. Now this is about gap. Now I'm just summing it up. And then covering some of the natural candlestick patterns. The first is actually a doji, which I told you a doji is a simple cross where the open and close are close, very, 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 very nearby. The price range is very close by. Yeah, where it happens is most important. It happens at the top, it happens at the bottom. It's indecisive. There is no direction in that. It doesn't have any direction to go. The follow-up is most important. Then there is a spinning top. What happens, in a bull run, suddenly there is actually the shadows are longer, the body is small, which is a spinning top. Yeah. And then there are some bullish candle patterns, like so far whatever we have learned, like a hammer bottom. There's a sliding market. Suddenly you find that the shadow is longer, the body, there is a green body which shows some strength, which is a hammer. What if it's an inverted hammer? Yeah, inverted hammer is, when the shadow is on the upside. There's actually, like a similar doji. What if the open and close is same, but there is a long shadow? It's called a butterfly, or it's a dragonfly. I'm sorry, it's a dragonfly. Um, uh, which is nothing actually. If there is some body, then obviously it's called as a hammer. Yeah. If there are shadows on both sides, it's called doji. If open and close is same, then obviously it is called as, and if there is a shadow at the bottom, it's called as a dragonfly. Now there is an engulf, which we have been talking about. Engulf, the second candle, which is larger, which is a longer, which is larger than the previous candle, which is an engulf. There can be a bullish engulf, there can be a bearish engulf. Either way, there is an engulf. Then there is piercing. As you said, as I told you, as we discussed earlier, any candle which has a substantial length compared to the previous, it's a long candle. The 50% mark is critical. When it breaches, when the subsequent candle breaches that level, if it's a long red candle and it breaches 50% upside, it's actually a piercing. It's piercing. It's a haram. It can be an harami, which is trying to tell that there is a change in trend signal. Similarly, there is a large green candle and the follow-up candle, there is a piercing below 50% level. That is also a trend reversal. Yeah, that's a dark cloud as we spoke about. Yeah, and then there are morning stars. Typically, that again indicates there is a change in trend. There's not much of a difference between a doji. Doji is purely across. It's purely across, and then and then there is actually three white soldiers, which means there is a continued. There is a negative, small negative trend. Then there are three, even if it is smaller. Yeah, same colored upward movement. There is a substantial movement. Then it is called three white soldiers. Yeah, as we go ahead, there is one more name to it. We'll be discovering it as we go ahead. Now, exactly reverse of this are some of the bearish candlestick patterns. You will have these materials with you. You will definitely know more about it. The evening star or shooting star. It is called a shooting star when you actually find a typically at the top. You'll find a hammer, then or rather, I would say an inverted hammer or a hanging man. Obviously, there is a trend reversal. That's a shooting star. Then there is actually a gravestone doji, just like we saw dragonfly doji. If it is happening at the top and it is reverse, it's reverse, like the shadow is on the upside, then it's a gravestone doji. Usually we have seen this gravestone dojis at the end of a big bull rally. We have seen this at the big bull rally also. We have seen a signifying end of a large rally also. And then engulfs. These engulfs are most common. You will see it in every type of chart. And then there is a dark cloud, which is nothing but a piercing kind of a pattern. And then there is an evening star. Not much of a difference between a shooting star and an evening star, except the shadow is much longer in a shooting star. And then uh, three black crows, exactly the reverse of white soldiers, could be a black cross. Yeah, significantly there is an up move, and the following action is actually there is a small 1 2 3. So unicolor, same colored, a slow downward movement. It also signifies the market is losing strength. Exactly the way the market is gaining strength here, the market could be losing strength. These are some of the candle patterns which I wanted to share with you. Now, this is how exactly in one chart, if I have to show everything in one chart, how does it work? Yeah, first we are seeing, at the bottom, at the right, at that corner is actually what we're talking about, the doji. And soon after doji, you saw there was a small up move. And then, again, there is actually there is some dark cloud, and then market manages to come down. Then can you see here the three soldiers? Then there is an up move again. Of course, engulf. I should not forget that there is an engulf here. It does not cover the bottom, but it's a long enough rally. There is a long enough bull rally, and then you see this again, a spinning top at the bottom, which again signifies there is an upward, and then here there is a doji, clear doji, and then follow. This is purely, this is a long candle. Again, you can see dojis here and some hammers here. This is how this actually market is in a sideways movement, but you have seen most of the patterns. This is how we need to identify, recognize. These are the candles we need to recognize and work on the follow-up.